I want to put you on the spot now. How much have you guys disbursed so far?
Yeah, it's somewhere between 40 and 50 billion. Documentation and information is all part of financial education.
Most people don't even know that they can access capital for 9% if they are in the
yeah.
creative industry.
Interestingly, we've gotten one of these intervention funds, but guess what? What a lot of people don't tell you is that you still need collateral to access it.
Obviously, you know, as an entrepreneur, you know, you also want to say that, like, look, I'm a risk taker. I can do all the things as long as God is by my side.
By the grace of God.
But at the end of the day,
Yeah.
you know, 2 + 2 is 4.
We look at the creative from what we see now, the creative industry from what we see now. I just want to touch point on the reform movement. But what it could become, we haven't seen it.
One thing that needs to be solved in the Nigerian space, both from the consumer, lender, and entrepreneur side, is trust.
So the number is 11%. So the question you'll be asking yourself is, what's 11%? That's the 2024 credit penetration in Nigeria. Only 11% of Nigerians can access loan. So if you're looking at a country of 200 million people, and you're taking 11% out of 200 million people, that gives you 22 million people. It's still poor. It's still low. The access is still not there. We can blame the government. Blame them in terms of, okay, they have done some initiative and they have not implemented them well. We can also blame the banks. If you look at the Nigerian banks, only 2% of their assets are loan. And we can also blame the individuals, which is the SME owners and the normal individuals, because they feel the KYC process of having proper documentation than the rest. But that's what we are here to solve. That's why we are creating this conversation. We want to know what's the problem and what's the solution. So I brought with me 3 heavyweights. They are the elephants in the room. I'm just the small guy. So with me, I have, ladies first, I have my beautiful co-host, Chiamaka Francisca Odechukwu. She's a marketing head, which means anything marketing, she's a head for it. So Chiamaka, how are you doing?
I'm very well, thank you.
Yeah. On my other hand, I have, he's a big man, but I don't like saying he's a big man. And I'll give you the reason why I say he's a big man. He just won the Cascadel funds, and I know how much that fund is. I will not put him on the spot, but I know how much that fund is. He's the CEO and co-founder of Sycamore. I think I enjoy and I love his vision. His vision is to make African prosperous through the system he has built with Sycamore. Mr. Tony, thank you for coming in.
Thank you for having me.
Yeah, so we have another retail giant in our midst. This industry don't get the spotlight they deserve, but they are quite prominent in Nigeria, which is the perfume industry. Seinde Signature are building niche perfume brands for the Nigerian industry. There are 9 locations across the country in most of our VIP airports. And we have the general manager here to tell us, okay, how he has built it, or how it's a family business, how the family has built it to 9 stores in the country. Motolani, thank you for coming.
Thank you for having me.
Yeah, so I'll start with you, Mr. Tunde, because it's been a while I've seen you. How have you been a father and winning Cascade?
Yeah, fine. It's been an interesting 12 months. So much has happened personally and professionally, and many reasons to be grateful. But just, as you know, with I guess the more you do, the more work you have to do. So much is given, much is expected. So yeah, it's been feel blessed. And I also feel a bit, I don't say overwhelmed, but there's a lot of work in the pipeline because of everything that's been happening, but grateful all in all.
Yeah, just to stay on you before I pass the baton to Chiamaka. The Cascade Fund, I was having a conversation with one of my friends. I was like, oh, look at this one bringing. I'm super pumped about this episode. This is what we're going to discuss. I was like, tell us how they do Windows speeches.
Oh, I agree.
And I'm putting it in clear tone, like,
Okay.
How do you, number one, how do
Okay.
you get access to those pages?
Okay.
And how do you win?
Yeah, it's funny. I've told the story in different ways, but I mean, I'll just summarize it here because of time. Collateral is like an entrepreneurship accelerator program. You need to have been in business for at least 2 years and be doing at least 50 million annual revenue. So what happened is in 2020, I got a call from a friend saying that, oh, this program is good. They take 10 entrepreneurs a year. It's very selective. A lot of people apply. And I was a bit skeptical, but and yes, I'm in fintech, but I've not applied for. I don't typically do accelerators, and that's a different story. But I was skeptical, but I applied anyways, and I got rejected in 2020. And but it's funny because they told me, oh, I was a good fit for this program, but they sent me rejection mail a week later. You know, this kind of interview, you're getting good vibes, and they say you've like gotten the job, and then next week they bounce you. Anyways, I left it at that. And then next year, another friend called me, told me about the same cascade law, and I'm like, these guys, I don't think they want me because they told me no, and they, but I applied and I got in. There was no money involved. We just went for 1 week. We're in legal business school, training us about businesses, pitching, marketing, everything, and it was a transformative experience, to be honest. There's so many things that I took out of just that 1 week, and you become part of the community, right? Because the founders, the vision is all about impact. Anyways, fast forward to 2024, we all get a call, all of us in the alumni community. That's the 10 entrepreneurs every year, right? Because now we are all friends, we're family, we meet once in a while, we hang out, and they said they're going to start a fund. The founder, Dave DeLucia, a fantastic guy, is an American, and he said he's setting up I think it may be $10-20 million fund. I can't remember the exact amount, but he said he's going to be giving entrepreneurs debt or equity every year. It's going to be funding alumni, and he told us to apply. And he said this year there was $2 million up for grabs. And he partnered with Sterling. Sterling loved the idea. Sterling added another $2 million to it, so there was $4 million. So all of us in the alumni community were told to apply. Interestingly, I don't want to go through how rigorous the process. It was very, very rigorous and very, very rigorous, because Castella's Sterling came to drilled us the way a normal bank would. And after all of that, I would say it's ended in a good story. But it's been a journey of over 5 years cumulatively, from joining Cascador to getting any money, and didn't join with the intention of getting money. Went there to just go and learn and network, right? And this opportunity came 4 or 5 years down the line. So I think maybe if you go after impact, self-development, good things will follow.
Yeah, true.
Yeah, so maybe that's a good way to summarize it.
All right.
That's nice. Thank you for your story, Tunde. So I'll just go to Motolani. I understand that creative businesses here in Nigeria are usually not necessarily seen as having tangible resources, or even being able to actually access credit or funding based on what they have or what they sell, even if it's great, right? So I just wanted to ask, how has it been, building Sycamore, through that process? Just tell us through the process, what has funding been like? How has credit accessing been like?
So it's been an adventure. It's been very up and down. So, what I think we're lucky and we're privileged as a business to be a high margin business. So what we've done is that, especially for the fact that, we're bringing in new products into the market, and we're trying to introduce them to the Nigerian audience. And, what happens is that as we promote these products, people start looking for them, but they end up looking for them in our rivals' stores. So what we had to do was build up fast. And that meant looking for financing. And, one of the key issues that we found as we're looking for financing is that people say, perfume. I don't need perfume. I just have 2 in my house. I don't need more, and all of that. Or people will be asking, how can a perfume cost this much? Like, I would never buy. Somebody once compared us to Barbie. to going for a pitch. So, at that point, we see that, there's a lack of understanding of our business. And also, a lot of, in the Nigerian market, people or banks or financiers are looking for safes, what they consider to be safe, which is real estate or oil and gas. But, we persevered. We went for some financing that maybe some people would not necessarily want to collect, but we can take those on board because we have high margins. So we've been able to take some of those financing, refinance them, work very well. All our financiers are very happy with us. Obviously, we would rather not be with them. We'd rather be with some longer term, much more patient capital. Which we're working towards, of course. But what we've seen is that, we had to take some, should I say, what some people might call predatory financing. But, like I said, we're lucky to be able to take those hits or those jabs from those predatory financing and still be alive and still be,
keep on
thriving and, looking forward. We've seen that to get the larger, much more patient financing, you already need to be a billionaire, in the sense that you need to have property that is up to a certain amount. You need to, and they're not also interested in taking your stock as collateral, so you have to have some backing that is,
strong.
VIP level backing. Or you need to have property that is already, you need to have property in Ikoyi, VI, or Lekki, or Asokoro in Abuja. So at the end of the day, those are the kinds of things that we're seeing. So you face all sorts of bumps on the roads. You see people with fake land documents. You see agents who just want to collect money from you. All those kinds of things are on the road. And sometimes I just wonder how, like, a low margin business that requires a lot of financing upfront can survive in this country, and because we do retail, we sell every day. What about those people who don't necessarily sell every day and need a lot of financing to start? How do they survive? I really wonder how they do. Maybe with this help, they do more
where you come about it. Yeah. I mean, I think I really like the answer that he trying to give, because it spoke about being able to take the capital that was relevant to your business. And I was talking recently about growth levers in a business, and smart capital is one of them, right? Knowing the kind of capital that you can take. And I always encourage people, everybody needs to do their own analysis to know the kind of money that you can take. So we'll say in Nigeria, for example, right now it's very difficult to get a loan from a Nigerian commercial bank at less than 30% a year, right? And when you see 30% a year, everybody says, "Oh, that's a lot. It's too much to kill the business." So the question is, I always ask, have you done your own analysis? And what do I mean? Your business is a 70% margin business. You can't be giving the same response that somebody with a 20% margin business should be giving, right? Because maybe you can afford it, even if it's just for the short term. And the way financial relationships happen is it grows over time. So sometimes you will start by just building a relationship, right? And eventually, all the conditions that you spoke about, it would start to reduce, right? It's not always going to be, oh, go and bring this, go and bring that. And many people are doing a lot of work to create alternative asset classes that people can, learn from. That's part of the work that we are even trying to do, right? Where we're trying to sell, we're talking about luxury items. I've seen a lending company that takes luxury watches as collateral in Lagos. So if you have a Rolex, if you take a $4,000 Rolex, come, we'll give you a $5 million loan. Just drop your watch. Just drop your watch and be going, right? I think like maybe 2 or 3 of those kind of businesses, and that's the reality we're coming to, because not everybody has a house.
Definitely.
So it's a case of the rich getting richer, because if I need to have a house if I can get a loan, that's chicken and egg. So which one comes first? Is it the house? How am I going to get the house if I don't have money, right? So right now, what's happening with the whole fintech revolution that a lot of people are complaining is too much, is a lot of these problems that we're trying to solve, right? To create other asset classes, to let people know that not everybody requires the same type of finance, and you should be talking based on your own margins of your business. Don't go with the bandwagon. If everybody is saying 30% is much, 30% accrues over the year, by the way. So that means if you get an overdraft and you use it for 6 months, you're effectively paying 15%. But I mean, it's not
financial advice.
Yeah. So it's like everybody needs to do their own numbers and see what is relevant for them, and not just money is expensive, and go after what's relevant to your business.
Yeah, well, I want to touch on something that I was doing when we're doing the research for the podcast, for this show. Sorry. I saw that the government launched an initiative. It's a creative industry initiative that you can access capital for 9%. So, because most people don't even know that they can access capital for 9% if they are in the creative industry. So, creative industry meaning you are in the creative industry. Movies are in the creative industry. Music are in the creative industry. So, what platform like Sycamore breaching? What are you going to breach that gap to make this information get to people?
Yeah, I mean, we do a lot of financial education, as you know. I just mentioned I was shooting a video yesterday. I did like 4 videos that I post. I write a lot. I was not written a book about economics. So we give a lot of information. The challenge let's talk about this creative funding now, for example. A lot of this funding, they're routed through the banks. So you can't get them directly from the government. Most times they're going through BOI or DBN, and you have to go to a commercial bank. And the challenge with going to a commercial bank is this. The commercial bank is selling money. When I say selling money, interest loan at 30%. You've given the bank a facility to sell at 9%, right? What is their incentive? To push it. So what's their incentive to push the money that is not, I mean, they don't have any risk. They may make a management fee or a spread, but they're not incentivized to push that money, right? Interestingly, we've gotten one of these intervention funds, but guess what? What a lot of people don't tell you is that you still need collateral to access it. Yes.
As a company?
As a company. As a creative. As a company. The problem is, so what will happen is, so let me tell you what happens. You go to the bank, you say you want this, even if you go to BI today and you want, BI can give you money at 9%. BI will tell you, go and get a bank guarantee. The bank guarantee, bank will say, oh, you want 100 million, for example, you need a collateral to get a bank guarantee. So we're still back to the same collateral. You understand? So that's the issue, because if I want this, let's say you even know. So the first, like you mentioned, is the information. So you have the information. You go to the bank. Oh, there's creative fund. I'm a content creator. I want to buy this kind of fine studio. Give me 100 million at 9%. So no problem. We'll give you. You are very nice guys. Well, go to your bank. Go and get a bank guarantee. We'll give you. You go to the bank. Bank, give me bank guarantee. So you need collateral to get this bank guarantee, and that's part of the challenge is I think right now, and we've been doing a lot of work about it, where what are the other options for collateral, which is where I'm coming from, right? And that really needs to be solved. Either we solve that's one of the many problems about credit that needs to be solved. We make other options for collateral, or we make it easier to buy property.
So I don't know.
I mean,
it depends. Anyone,
But the thing is that at the end of the day, like, I can't really blame the banks or everybody for like wanting collateral or wanting the bank guarantee, because the shege that they've seen, do you understand, has to be spoken for. At the end of the day,
shege is very important. That shege is those of us in the lending business.
As in, what's your recovery rate?
Our recovery rate is actually very high, but why? Because we have, for certain loans above a certain amount, we use vehicles as collateral. That's how we've made it easier, right? For smaller amounts, say, you want maybe 10M, for example. Okay, do you have a car? We won't even take possession of the car, right? We just need the car documents and all of that. And we've seen that a lot more people have cars, obviously, than have houses, even if the amounts are lower. We've had a lot of people even offer us property, but we've said no most time, because we try to sell a property. The documents, you first blah blah blah, you first fight with documentation and all of that, and it's it's what we call an illiquid asset, right? You might not be able to sell it at the time that you actually need cash, or you just devalue it significantly. I should say Toyota Camry or GG. Yeah, 48 hours. I mean, it's a liquid market, right? So, that's really interesting.
So, what I can hear, documentation is a very big problem when it comes to SMEs, and or you also say MSMEs have that same issue.
Yeah. So you see, your point is perfectly with what Kelechi was saying earlier, which is the documentation and information is all part of financial education. So it's one thing for somebody to be aware enough to know that, let's say, 9% facility exists, and then to know what is even required. I'll give you an example. In a program recently, and we're talking to like some entrepreneurs. Entrepreneurs been in business for 10 years, had never done a financial statement, doesn't have some records, and even when we went through Cascador, right, the requirements for documentation was a lot. That if you don't have a structured business, which is a barrier to getting even a bank loan that a lot of people don't talk about, they are very rigorous for good reason. They have CBN policies and also to watch their backs, like Kanye was saying. But if you don't have enough documentation, if you don't have enough records, you can't even get it, because you need to show a lot of cash flow. You need to know the proprietors of your business. They need to engage and understand your business very well. And again, so I was talking about the fact they lend oil and gas. Some banks have oil and gas desks, right, where they have experts that aren't talking the language of the engineers, because they need to assess the risk very well. So if you're not documenting, you're not aware, you don't know these things, and which you would get with financial education, that's already a barrier. So beyond the collateral, do you even have the documents? Do you even have the information? Do you even know what you're supposed to be aware of?
I think that's actually a huge problem, because I know that documentation is very... It's a culture we've not necessarily built here in Nigeria. Every business would have the CAC, definitely. They will say, okay, we have CACs. Most times, they don't even go ahead to open up a business account. They start using their personal accounts for business. So I can imagine. So it still boils down to the seriousness of, or how banks or maybe lenders will say, how creative businesses are serious, if they are serious enough, So I want to throw that to Motolani. Are you guys serious?
I mean, so we have been accessing credit facilities. We are in the process of accessing more credit facilities. So our documentation is on point. Another thing is also employing able financial experts in your team.
Absolutely,
is very, very, very important. So that you're getting very sound advice that helps keep your business afloat. There's a lot, and there's also obviously as an entrepreneur, you also want to say that, like, look, I'm a risk taker. I can do all the things as long as God is by my side.
By the grace of God.
But at the end of the day, 2 + 2 is 4. So you have to have, like, in-house, you have to have that financial help. So I even have friends that have small businesses that sell stuff on Instagram and stuff. And I'm always telling them, like, look, that your friend that is an accountant, talk to them.
Yes.
Make sure that you have your sales down. You know how much you're earning a month. You know what you're spending as well. You know what your margins are. Are your margins real? Because you can have imagined margins. Like, you can see your product and say, I'm making 50% off of this. Are you really making 50% when you take in all your costs and your taxes paid? All those things. So I just think it's important. Financial education is important. I've seen some of the things that Sycamore is doing. So I know that financial education, I mean, before you even give loans, you have to also let people know this is what you need to do. So, like, important. Everybody employ somebody or speak with your friends. Even if you give your friend lunch, let them tell you how you should run your business.
Absolutely.
But I'm looking at it from this perspective. We look at the creative from what we're seeing now, the creative industry from what we're seeing. I just want to touch point on the form movement. But what it could become, we haven't seen it. It's really happening in America and in China. And I'll give you an example. Somebody that is in live sales in China made almost $400 million a year for just doing live sales in China. If you finance that person to do live sales here, $400 million, you see the economy the person could create.
I would say I would touch on that because I've also worked in e-commerce and retail as well. And I would tell you that first off, engagement levels in Africa on social media are at a different plane from what they are abroad, especially in China. And in China, they have their own I don't want to say local because those companies are big, but they have their own social media accounts that everybody is on, like WeChat and all these different social media. So those ones everybody's on. Then you need those accounts to even operate in China. But in Nigeria, all those kinds of live sales and everything, they kind of struggle because first off, the engagement rates are not that high. Transaction completion as well is not that straightforward through like an Instagram in Nigeria. You can't check out off of Instagram. Like I can't just say something, click on the bubble, it leads me to something. I don't say I want to buy this, put in my address and it goes. No, you have to still go somewhere else to make your order, have like a customer service team to so operationally I don't even think like we're there yet on a retail perspective, but I think that there's still a lot of potential. But from a Nigerian, I mean, like we say, like there's other things apart from the product itself, the logistics of getting the product to the consumer. A lot of consumers asking for payments on delivery. And there's a huge trust deficit. You know, like you said, we talked about Shege. A lot of consumers too have experienced Shege. From buying an iPhone and the iPhone is showing Nokia. Do you understand? There's I think one thing that needs to be solved in the Nigerian space, both from the consumer, lender, and entrepreneur side, is trust. How do we conquer the trust deficit? Because that's why the banks are asking for your arm, your leg, and your grandmother to be able to get in a loan. How do we, close that trust gap to ensure that things can move smoothly? In America, a business or in Europe, a business like ours can easily access a 3 to 4 year financing that is sub 10%. And they will be helping us along the way, sending us resources, helping our life. But in Nigeria, not once they meet you the first time, 6 months, they can give you money, but they'll even tell you 6 months, 1 year. Nobody's giving you anything beyond that. So it's like, so there's a trust deficit. We see it, but that trust deficit now negatively affects those who are actually passionate and and are serious about their business. But at the end of the day, I can't really blame them because I've also heard stories of maybe somebody collecting a loan and then going to go and buy a fleet of cars.
Well, let's look at it this way. Let's look at the 11% credit penetration 2024 in Kenya alone. 64% of their population said they used credit. But Nigeria is just 11%.
Small, very small.
It's very small for a country that is dealing with this massive gap in terms of. See, what I know the World Bank. It's a World Bank. They introduced a policy whereby you lend now with cash flow and not collateral anymore. Especially in markets like this. But also get the accessing credit from also the Western guys is quite expensive. Even the federal government are complaining that they need to develop their own credit system. When my friend said, oh, we need to develop our own credit system and stuff, even AU have floated it. And I said, okay, who fund it? Who fund it? It's your credit rating being adopted globally. So my question is, what's Sycamore doing in terms of, okay, how do we take this 11% to 20 to 30 to 40 to 50%?
First is that, as we've all acknowledged, we can't do it alone. We can't do it alone. And there are different issues for why that figure is so low, right? And I don't even know if we can talk about all of them, but just a few is, so you know that debt is for growth mostly, right? Is really not for starting from scratch. I don't say scratch. People generally will say, "Oh, we don't start a business with debt." That's general advice, right? But that advice is nuanced, because if you're Dangote, you can start a refinery with debt, which he did, billions of dollars, right? But that's because there's cement and all these other things, and like, but there's money here. If you mess up here, we'll collect our money back, right? But you're just up and coming in the world, so you might not be able to do that. So the challenge with that is we already have a lot of people that are not earning enough money. Simply put, and when I say people, I'm not talking about there's a way we think in Nigeria. We try to think a lot about like the urban areas, right? Lagos, Abuja, Port Harcourt, the place there's ready money. So the question is, how are we unlocking? Because the other percentage, the 30-40%, is going to come from those other areas, right? So what are the problems in those areas? Plenty, right? We can start with security. We can start with spending power. We can start with even the infrastructure to just move the money. There's still a lot of cash. So we recently started doing business in Kano, by the way, which is how we're going after the other percentage. There's a market in Kano for livestock. People carry a lot of cash, right? Somebody can go to the market in their backpack with 20 million there to go and buy cows and stuff, right? And everybody's trading with cash. In Kano, yes. Kano is, Kano will be dragging in Lagos for population. Obviously, it's not as industrialized as Lagos, but huge population. A lot of the northern billionaires are from Kano. But guess what? There's a lot of, it's not very, very urban. It's developed, nice hotels, in big factories for like things like rice. They have a big farming and a lot of some industries, but there's still a lot of informality in the way cash moves, in the way people even conduct their life. So there's a lot of opportunity there. And that's just an example, right? So the question is, how many of us are actually doing the work to go and capture those guys, right? And again, it's also because of some of these issues I've mentioned. Like, it's not me that was going to. Some people say, I'm not going to go and or then you look at how much are they going to spend. Then you look at also just making sure that the system works. And I was reading somewhere, we need to do things that are also going to create a lot of jobs for these guys, not just the guys in Lagos and Abuja, so that they can have money to actually apply for credit. Because if you're not earning a salary, even if it's 100K, nobody's going to give you credit, or you're not a business generating revenue. So first, how do we make these places safe? How do we put money in their hands? Which is why we actually need businesses to be big. I'm trying my best. I've been on this personal campaign where I want people to stop just want to remain permanently as small businesses.
Oh, welcome to our podcast.
I've been fighting it. Yeah, you need to think of a small business as transitory. You're going to be small today, but you need to get off Instagram. I like that your friend, that Motolani's friend, right? He can't stay in Instagram forever. He has to move, and I'm just using it figuratively. He has to move to stores. He has to have 9 stores. Those 9 stores employ people, right? And they create jobs. Those people can get credit. But if you don't create more jobs, nobody can get credit, right? And then we need to now, even African businesses as well, and just to add to your former question, or to answer your former question, and I think in Nigeria, we also need to be more intentional about making ourselves global businesses. There are very few Nigerian brands that are global. Very few. And I honestly think that we get a bit too comfortable where we're like the king of the hill, like local champion. I'm number 1 in Nigeria. Like, okay, so what next? Right? What next, right? So I think we need to keep be very, very progressive, even from the small, big. When you are big in Nigeria, you should be global, because you then employ a lot more people, and usually you keep more jobs in your home base, which is Nigeria, and then we'll explore those things.
Just to talk about being in big business, I did growth for an Australian firm. So we do, we participate heavily in youth sports.
Oh,
We
nice.
offer them mental health and high performance training. So we want to catch them young. And my boss is, so let's go to India. Let's go to the Indian market, 1.4 billion people.
Yeah.
Before you know, she has network in India. She has gone on university tours. She has set up a team, and now we are in India. Let's go to Africa. Let's go to US. So you see how they think at scale.
They think of the world like a map of one country. Like, when they're talking about China, you think they're talking about Ibadan. Right? It's like, okay, when are we going to? We can't go to China yet. Okay, let's start with Canada. Okay, it's close by. We're in the US. And they're just thinking about it so simply. And, we still, yes, there's a lot of opportunity. I'm not saying we shouldn't. I don't necessarily think you even have to be number one here before you start expanding. A lot of American and European businesses, they didn't necessarily conquer their regions before they started looking out, right? It's doing okay, because you have to diversify too, in spite of survival, not just growth and scale. Because you notice that some markets sometimes we just have issues, and if you're only in that market, you can actually die if something affects your business, maybe cash scarcity, or whatever affects something, So you're right.
I wanted to say that might you still try that to access.
Access in what sense?
Accessibility, right? So we don't necessarily have access here in Nigeria.
Access to what?
Right. Access to maybe say some formal education, access to the internet, understanding that there are some certain information on the internet that could help, expand our thought processes. So I think that we should still tie that to access.
That's their business. As a business idea.
Actually, it is.
I actually think, like, just to piggyback off what Babatunde said, is that, like, I think the hinterland is where the real money is at the end of the day. Because if you look at any country, nobody stays on the coast. Like, the businesses on the coast, tend to move inside in order to, like,
get more market,
harvest. And I just think that, like, that's really where I think the challenge is for businesses like Sycamore, even businesses like ours, to be honest, because there's also a luxury market in there.
There's a big luxury market economy.
Yes, I mean, that's something that we're looking at, but it's like how I think businesses really need to think about when thinking about expansion. Lagos is nice, Port Harcourt is nice, Abuja is nice, but Ondo State, Oyo State, Edo State, what's really going on in there? And I think that as we continue to build on that, build businesses that have branches in those locations, and especially with retail, like I don't see why if you're making clothes and selling them in Lagos, selling your clothes at 12K. You can't have a store in those states, which you might 100%. End up dominating
100%.
At the end of the day. But 100%. Everybody, tends to look at Lagos and so on. So, I definitely do think that the hinterland is where the next billionaires are going to come from.
Yes, absolutely.
It takes a lot of work to get into the market. It will be a mad market.
It's work, but it's also intentionality. Like I said, it's also... the channel I got point about access. I think access is also progressive in terms of if you want to get your first credit or you want to do something initially, I don't expect a very, very tiny business now to 1 billion today, right? You start from maybe 10, and it might look intimidating initially, right? But you start from somewhere, and then you move gradually. You just have to be intentional to say, this is what I will do. I have a friend that father run a retail store that took care of the whole family in a state. I don't call the name of the states, but not one of the major states. But he took them to school, he sent them to school and all of that. My friend schooled abroad. It's like, we have a good brand name. Why have we had one branch of this store for almost 20 years? When he came back from the UK, more than 6-7 stores, man. And the business, obviously commands a lot. But there was just a sort of comfort and maybe not enough risk raising like risk appetite, and that's the correct word, right? It's like, no, I'm fine now. My children don't go to school. This one, it took you to UK now.
Where you come? I mean, but what you said about transition, like you see where you are, like as transition, not where you're going to be forever. So I think like just thinking of yourself, because like we think of us like. And I keep saying, my dream is to have a business that does. So obviously, it's where we are as transitional. So
and there is the thing about it also being traditional, like I said, is also not. Yes, there's a selfish perspective because you would make more money, but that's not the sole purpose. You would create more jobs. Your business would pay more taxes. You can potentially go and open a factory that they are making your clothes in one of these states. And there's an arbitrage for labor. You pay them less than you pay Lagos person. They're not paying 20 million naira rent for 2-bedroom flats in some of those places. Like, so you can afford to pay, and it is more than they had. Someone that doesn't have a job today that is earning 200K, that's life changing in some states in Nigeria, right? When you open up a factory, you literally, because you've transitioned to a big business and you employ people all over Nigeria that's serving the world from wherever they are. So from that perspective, that impact of you wanting to be a big business is also selfless because you are creating prosperity on a larger scale.
I want to put you on the spot now. How much have you guys disbursed so far?
It's somewhere between 40 and 50 billion.
So the question is, what's your key criteria for disbursing? What makes a perfect client?
What makes it a perfect client? I don't know if there's such thing. I will use the word credible.
Okay.
Credible. I mean, don't mind me, just semantics, but you have a good cash flow. You can sort of estimate that a person of integrity. To a large extent, I think it's really just around you having enough cash flow and you having a history of meeting your obligations, which we would tell from, credit history, really. And again, we'll probably start you somewhere smaller before we then open all our, but for the most part, we're just checking cash flow, we're checking your credibility. Initially, if we're starting a relationship, we're also very big on asset cover, which is, does your car cover how much you're asking for? But then we tend to be more flexible on that because at the end of the day, even if you ask the banks that have taken buildings that are struggling, said nobody wants to take your collateral. There's no financier that actually. Some people feel like, I have car, you must give me a loan. You don't even want your car. It's because I don't want to start selling it. It's only that's in the engine of. I'm not in the business of selling cars.
Yeah, sure.
Right? And the banks are in the business of selling buildings either. So nobody is actually quite as interested in the collateral as they are in, but what's the character of this person? Can the business also sustain it in terms of what they are asking for, right? So cash flow, the character of the proprietors, and obviously good records, because to make a decision, we're obviously going to check your credit history and your cash flow primarily.
So I also think relationships also like play a very, very big part in the assessments.
Yes, of course.
For financing, because I think in Nigeria, a lot of us, like even in employing people, some of the best people that you employ are people who are recommended.
Yes.
Relationships also play, because one thing with banks is, if you don't have a relationship with someone inside, the likelihood of getting financing is greatly reduced.
Is it scalable?
But it's to the thing, it's not right. So to add to your point, I used to make this joke that the performance level you get from bank or the service level, it depends on your account officer. The corporate. If you have an up and doing account officer, you enjoy it. But if your account officer is just like laid back and chill, but I like that. I love that question actually. Is it scalable? Because you want everybody to have an equal footing. So we one of our pillars for this year at Sycamore is self-service, right? Because we built a lot of tech, but there's still a lot of human interaction sometimes where people are calling, why not Sunday, blah, blah, blah. And we're trying to get the system, okay, you don't know me. You know, just go to the app, submit your documents. If everything checks out, you get the amount. Everything just happens. You don't need to know. I don't even want. You don't want to be there, and it helps them too, because it's not a question of it shouldn't be. It helps. So building a relationship over time always helps.
Yeah.
Like I said, if you have, so typically we would have our average loan size maybe 5 million naira now, for example. But a lot of people have progressed to much more based on relationship over time. But initially, at least for first point of contact, I don't think you should know me to get I don't even like it, right?
Yeah.
Just go to the app. We spend a lot of time building app and the whole technology infrastructure, the whole technology teams, go to the app, submit your documents, you get a response. This is what you're qualified for. So no relationship required. That is what technology helps with scalability, right? So I think we are working towards that of, please, you don't need to have a relationship if you check all the requirements, right? And if you don't today, you will tomorrow. All the banks we spoke to 3-4 years ago, they bounced it for 4 years ago. I don't think we could do any business with any Nigerian bank because they're like, go and bring this, go and bring that. Today we have some of those things, right? And it's now an easier conversation, but it's grown over time, right? The first major overdraft process in Nigeria took us almost a year, and it wasn't even a lot of money. I call the amount now. People say a lot of money. It was. We don't think it was a lot of money, but it was so stressful. It was, it took so much effort. It's like when it came, I was tired. Like, God, 1 year,
Yeah.
So we don't want that to happen. And us, dealing with smaller businesses and even individuals, we just want it to be based on you meet the criteria, the technology is there to serve you, and just working. And I'm not working, just go to your mobile app and do everything that you need to do.
Okay, so I'll ask the final question before I pass it to you to ask our final question. So my question is to both guys, how are you implementing AI? It's I can't say in this podcast to advocate for AI.
Yeah. I thought I did go first.
So I mean, how do I put this? We are a retail business selling fragrances, to our customers. So in terms of AI mainly serves a marketing function. So something you can use to create content, something you can use to create, on your website to help with optimizing, stuff on your website. Graphics, you can have some graphics done with AI. But in terms of our core business, AI doesn't really play a part in that as of right now. I've not seen any application yet that can make perfume that you can smell through your computer or something like that. What we do is we're selling perfume and hopefully in the near future, beauty products. It's difficult unless maybe AI, we can use AI to come up with formulations of formulas to create the next great perfume. But it mainly plays a part in marketing, in sending messages in operations, and coming up with ideation and stuff like that. But core business, our business is still very old school in terms of come into the store, pay or smell the perfume, like it, pay your money, put factory for it, put it in a bag, and you go and we sell out. That is what our business really does. So that's how.
I mean, so ours is a bit different because we obviously have more technology applications. I think that for technically, I would even say we're using AI before OpenAI, ChatGPT, right? Because right from time, we had an automated system of checking if people were eligible for loans, right? And that has been built since before. So it's something we've improved with this new wave, but we were not as freaked out about it because okay, this is going to make our work better. So that when when somebody comes, applies, you can get an automated decision based on just all the parameters that we've set. So AI is definitely helping in that. I like to think about AI like maybe two other ways. So first is, I like to look at it as how is it helping every department. So if I take my customer support, is there a way that it could help with automated chatbots for some responses, not all, because customers still want to hear, especially when it's money. They want to talk to human beings. We look at finance. There are some tools that we use that AI helps with, like reconciliations. Okay, you have like 5 banks. Can you have a system that they're integrated? And we look at which other thing? We look at human resources, for example. We're looking at compensation and benefits, the analysis, and we're trying to determine salaries and all of that stuff. So I look at that departmental way, and there are different ways, but in my mind, it's still an enabler. And broadly, we just look at it customer facing and operational, like bank, internal, which are all the departmental things I mentioned. But I'm also quick to want to rebrand the entire company AI. Like I've seen some companies do, like, oh, we're now an AI lender or an AI bank, an AI fintech. And so many companies have done that.
Make a case that it works for the VC community.
It does actually, it does, but I'm very wary of bandwagons, right? And I think sometimes even maybe overly so, because sometimes I'll just like, I'm not doing this bandwagon, but sometimes it's good. You don't want to now, because of not following the bandwagon, ignore something that is very important. So I think we're using it in different ways, optimizing every department, and then we're also checking ways it could be of value to our customer. But I think in terms of, personally, I'm still observing how we can make it a very, very strategic thing. I'm not really in a hurry to jump on it. As long as it's optimizing different functions internally and for the customers, I think I'm happy, because it's supposed to be an enabler.
Okay, so for me, it's just a charge, right? So they did mention something about following people wanting to assess credits by just knowing him. Right. I would just say that for our country, we should learn how to follow due process. Right. And when it comes to financial inclusion, I want to charge both the lender and the business to educate and also inform, everyone around them about, credit accessing, and also, ensuring that they are able to play properly, right? Play properly, get the loans and pay it off, accurately. So so that's all from me.
I think you met Nigeria big men. So always keep calling.
I think that when we put those parts in place, everybody will just have to fall in line.
True. Right.
Thank you guys for coming. It's been I don't want the conversation to end, but the alarm just stood up.
That's wrapped up.
So thank you guys for coming. Thank you for making this a classic show. We look forward to having you guys next time. If you have any comments, if you have any questions, just put it in the comment section anywhere you're watching this. We'll make sure it gets to them and they provide a response. Thank you.